What's good, boys? Today, I'm going to talk about break of structure. All right, so first, what's a break of structure, right? So, obviously, market moves essentially in trends, right? So, we'll have a bullish trend and then have a bearish trend, right? But when do we classify the switch, right? Because for example, so right here, we're clearly in a bullish trend, right? But we do know that the market moves like this, right? Right? We know for a fact the market doesn't move like this. In this case, we fucking did right here. But if you check out the 1 minute, we did not move like this. But in the a little higher time frame, market does not move like this. We move like this. When we're like in long term wise, we move like this. We make moves down and then make moves up and then make a move down and then so forth. So, when do we classify that we have now switched from a bullish trend to a bearish trend, right? So like, who knows? So you can see we're in bullish structure here, right? So we go up, we get a retrace, right? Who knows? You might have thought that now this is a bearish downtrend. You thought if you traded trend lines, right, you would assume that we are now going to continue lower, right? But that's not what happened. You can see right here again, when we're going down, right, we get a retrace up here, right? Because remember, even when we're going down, market moves like this, right? So even when we're moving down, we get this retrace. We get this retrace right here, right? How do you know that market was not supposed to just continuing higher? I just said continuing twice. What the sigma? But you get what I'm saying, right? Like, how do you know that? What if, like, you might have thought that, oh, we are starting a bullish trend now, but clearly we didn't. It was just a retrace, and now we are continuing lower, right? So essentially, what a break of structure is it'll help you identify when it has now switched from bullish to bearish or bearish to bullish. Okay, so instead of it just being a retrace, it's another confluence to show what kind of structure you are in. So remember, break of structure. So we are breaking structure to either upside or downside, bullish or bearish, right? So now, how do you identify that, right? First, you have to identify keys, being able to identify highs and lows, right? So for example, in this, so you can see here, right, we are bearish, right, and then now we are bullish, right? So at what point and this is on the 5 minute, remember all these confluences work on every single time frame. So at what point would you say, okay, we have now shifted structure to the upside, right? The way you would determine that with a break of structure is it would be the most recent high, a break of, which means a candle closure above or below the most recent high or low, right? Now, first off, what's a high, right? You can see right here, when we have these three black candles, none of these are a high, right? Because it needs to be a white and a black, which in your guys' colors would be red and green, right? So you need to have a bullish and a bearish candle right next to each other. And then the high of both of them, the highest wick would be considered the high and the lowest wick would be considered the low. So between these two candlesticks right here, right, you would say this is the high, right? And then remember these two candlesticks, because you can't use this one because this is same color as this. They are both bullish. So you'd use this one, and then this would be the low. Okay? Now, where would our most recent high be that got broken? Right? It's this high, right? Because you can see it would not be this one, right? Because we do have a black and a white candle right here, right? So our most recent high is this high right here. Now remember, we have to get a candle closure above. In this case, since we are switching to bullish, we have to get a candle closure above. So you can now assume, since this candle closed above, you can now assume that we are now in bullish structure, and you can use that as a 5-minute confluence and enter off that. Clearly, we are ripping. Now, for example, let's go ahead and do right here because we're already here. You can obviously, this happens hella. So where would our break of structure be? I'll give y'all a second. It would be at this low right here. We get a break with this candle because we get a candle close underneath. So this would be our break of structure, confirming that we are now in bearish structure. All right. So now you can see we are bullish, right? Now, one thing I do want to say that's very, very important. So we pointed out right here that we are now in bullish structure since we broke this high, right? Now, for us to be in bear structure, right? So we are now in bullish. We're bullish, right? Where's our most recent low? Our most recent low is right here. So for us to break structure to the downside, we would need to get a candle close underneath this low. Why is this the low, the most recent low? Because we have a bullish and a bearish candle side by side. The lowest wick between both of them is this one. So we'd have to get a candle close underneath this low for us to break structure to the downside, which we clearly did not get. So we are still in bullish order flow. We're still bullish, we're still bullish, we're still bullish, we're still bullish, right? Now, one thing's very important. You might think, okay, retrace. Now, if we were to break structure to the downside, we would need a candle close underneath this low, right? Because this is bullish, this is bearish, and then clearly we just wicked under. We didn't get a candle close underneath. So this is not a break of structure to the downside. But what some people might be confused with is between these two candles, this is the high, right? Some people might say, oh, we broke structure to the upside right here, right? Because we had a candle close above. So you could assume, oh, yeah, we're going to continue higher. It's not fucking true. We are in bullish structure right now. You can't break structure to bullish when you are already bullish. Does that make sense? So we already talked about how we broke structure being bullish right here, right? We did not break structure to the downside, and clearly we're just fucking ripping up, right? So we're ripping. Clearly we're still in bullish order flow, right? We get a small retrace, but this does not break structure to bearish. And then we do get a candle close above the most recent low. That's not fucking a break of structure to the upside. It's not a break of structure. Why? Because we're already in bullish structure. How the fuck are you going to break structure to bullish when you're already bullish? Does that make sense? That's the biggest fucking misconception with break of structure that a lot of people fucking do. You can't break structure to bullish when you are already in bullish trend. So this is not a break of structure to bullish. We're already fucking bullish. Does that make sense? So now clearly we can see, let me delete this. You can see right now that we are going up, and then now we are bearish. Clearly this is a bearish downtrend, okay? Now I want you guys to identify, where do we get a break of structure to the downside? I'll give you all a second. Okay. Now, some people might say this, but this is not, right? Our most recent low at this point right here would be right here, underneath here, right? Underneath that wick. I can't fucking. Underneath this wick, right? Because remember, it needs to be a bullish and a bearish candlestick. Bullish, bearish. We did not get a clear close underneath. Clearly, we just wicked underneath. So we're still in bullish order flow right here. We are in bullish structure right here. And then we create another most recent low right here, right? With a bullish and a bearish candle. And what do we see now? A clear candle close underneath this most recent low, confirming this to now we are in bearish structure. Okay. So get a break of structure here, like I said. And then now you can see we are clearly in a downtrend. Now, one thing I'd like to point out is that this is break of structures there are multiple there are going to be other videos on basically the structure of the market. Break of structure is the most common one. It's the most easiest. But and it's like the kind of happens the most, right? But another thing with something that happens the most kind of tells you that, like, for the majority, it's not really the best confluence, right? Like, I could tell you right now, if you took a trade strictly off of SMT only and targeted the most recent high slash low, most recent draw on liquidity, right, in whatever direction you're going, if you had good risk management, you would probably be fine, right? But with break of structures, it's just not going to happen. You cannot. A break of structure is like the last thing you should worry about. But you should still do. Like, okay, so for example, when you're entering a trade, why would you enter a trade bullish? So you're entering longs when you're in bear structure. It makes no sense, right? So what you want to do is always enter the trade. Just confirm that you are in structure to where your bias is. So if you're long, make sure you're in bullish structure. And if you're short, make sure you're in bear structure, right? But what I'm saying is this is not the strongest confluence. You can see right here, right? We get a pretty fat retrace up, right? Where would be our high? Actually, we don't. This would be our high right here. And we do not break above. So we actually don't break structure to bullish, but we do break structure to bullish right here, right? And what happens? We literally fucking continue lower, okay? So because our most recent high would have been right here, and we break above, meaning that we are now in bullish structure, and then clearly we still continue lower, right? Now, for example, right here, this is a good example. First, I want you guys to identify which is our most recent high, because clearly we're bearish and then we are a little bullish for a sec, right? But we do break structure to the upside here. I'll give you guys a second and just think in your heads, where's the most recent high that needs to be broken for us to break structure to the upside? All right, so it's not this one. It's clearly not this one, right? This is three white candles. These two white candles, these two bullish candles are surrounded by bullish candles. So these cannot make a high because it needs to be a bullish and a bearish candle. So our most recent high is right here, right? Now what candle confirms now that we are in bullish structure? It's this one. This one we wick above, yes, but we do not get a candle close above. So this candlestick right here confirms that now we are in bullish structure. So you could now assume that price is going to continue higher since we are now in bullish structure. These confluences happen every single time frame. We can just go in the 1 minute. But once again, this is really not the strongest confluence. Now, there are going to be other videos talking about structure. Break of structure, like I said, is just the most common, but it also changes very often. Like you can see right here. And it's also a good way to determine chop work, right? So you can see right here, this zone right here, this is straight chop cheese, right? And then you can just tell, okay, we break structure to the upside with this candle. We never break structure down to the downside here. Why? So we are in bullish order flow right here because we break this high, right? Why don't we break structure? I mean, we have some pretty fat candles down here, right? Why? Because our most recent low is fucking all the way down here. We did not break that. So we're still in bullish structure. We're still in bullish structure, blah, blah, blah. And then we break structure to the downside. And then we break structure to the upside. And we break structure to the downside. And then we break structure to the upside. Or no, we don't with this one. So we're still technically to the downside. But then we break structure to the upside with this. And then we break structure to the downside with this. And it's just constant blah, 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 blah. It's just over and over and over and over again. And obviously, it's a good way to identify that. Most likely, it's just chop work. Right, but clearly this is just fucking chopped cheese. So, yeah, that's really it. That's really all about break of structure. It's really just like, I really would only use it as like a 1 minute last thing. So you have to check it off on the last thing though. So you would never use it to determine your daily bias, to determine your draws on liquidity, nothing like that. It's just that before you enter, so you have to, you have your own model or whatever model you guys do trade. Right? And if you're trading my model, you do have to be in bullish structure or bear structure, whichever you're trading. So you would scale down to the 1 minute. And my last 1 minute confluence, my last bit of confirmation is that we break structure to what I am wanting. And if we are already in the structure to my direction, then I'll enter. If we already broke structure on the 1 minute to where I want to go, then I'll enter, right? You just have to make sure the structure of the market is where you are saying. So if you're in for longs, make sure we're in bullish structure. And if you're in for shorts, make sure we're in bearish structure. Last talk about like the other types of structures. So we're not really, there's really only two. You could say a change in state of delivery or change in state of direction, the CISD basically. That's not really, no. That's not really, it's kind of like an order block, I would say. But there is really only one other type of structure confirmation, and it's a market structure shift, okay? Those are 100% much more reliable. The next video is going to be about that, but a breakup structure is like I said, it's like that last 1 minute confluence. A market structure shift might be better on like the 5 minute, but if it is better on, it's better on every time frame, essentially. If you get a market structure shift, it's better. But what happens with that is most of the time you get a worse entry. Okay. So, and you'll understand what I'm saying when you watch the market structure video, and I recommend watching it right after this one. So yeah, but yeah, just make sure that on the 1 minute or whenever you're entering a trade for longs or shorts, make sure the structure in which the structure of the market is what you're fucking trading. So if you're going for longs, make sure you're in bullish structure. And yeah, that's really it. And make sure you get a candle close. It has to be a candle close. Cannot just be a wick. If you wick above or wick below, doesn't mean shit. We need to get a candle closure above or below, breaking that most recent low or that most recent high. That's it. I'll catch y'all boys. If y'all have any questions, just DM me. I got y'all. Peace.